All right, Bulls and Bears. Yes, we are back with another dose of economic reality. You're not going to believe the news that we have to give you today. Everybody, please make sure you are subscribed. Let's go ahead and get right into it. The economy continues to implode. Are we talking about Wall Street? No. Are we talking about the banks? No. They have been given endless liquidity promises. Now, not all the banks, right? Small banks, regional banks, the FDIC, Yellen, the Fed, they all came out and said that a lot of these banks will be allowed to fail or they'll be taken over, right? That's why we haven't seen a big um, set of new bank failures. Now we're a year out from the last one, over a year. It started in March of last year. Of course, it went on through, I believe, early summer. People are asking, why haven't we seen more banks fail? Well, that's because the confidence is back now because people saw what happened and they saw that even the banks that weren't FDIC covered and the depositors that weren't FDIC covered still got made whole again. They got paid out, even though the FDIC did not have the funds to cover everyone. Remember all the billionaires that had their money in Silicon Valley Bank? They all got their money back, right? So now people have confidence again in the banks. We're not seeing the bank runs. Now we're seeing savings dwindle. So money is still coming out of the banks because of just the fact that people have to get their money out just to pay the bills. And not just that, we see the 401k withdrawal set a new record last year. This year, starting off on a very bad note for 401k withdrawals. It's likely going to be worse than what it was last year if things continue the way they are. And it looks like, by all means, it's going to because nothing's really being done to fix the problem here. A drastic rise in interest rates and a massive cutoff in the money banks are loaning out. That would fix the problem. It would be painful. It would be a tough pill to swallow. Absolutely. But that's how you would fix it. And that's actually the cure for the illness, right? Is that. But what are we doing? We're actually just pumping more of this, I guess, medicine into the patient. And it's not helping, right? It's keeping the patient stable, but it's not helping. It's not going to fix things, right? So let's go ahead and get into the news, though. I just wanted to kind of give you that bird's eye view of what's going on here right now. This is bank driven, completely bank slash debt driven economic growth. They're calling it growth. I think most of you know what growth really is. It's debt accumulation. People going further into debt is looked at as growth. Well, let's start here. The stock market, starting off the year, looking at the Dow Jones, it says year to date. Pretty big drops here. We hit 40,000. Now we're down to 37.7. Similar story over at the S&P 500, which I like to look at because the Dow is just what 30 companies. So it went from 5,300 down to 5,000. So not what people had expected. People had expected that this year being a selection year, that they would push the stock market up all the way through the end of the year, basically. And that's not happening. A lot of the big money is starting to get worried that the rate cuts are not in the cards. And we heard the talking heads out there saying we may not get rate cuts. They're acting like they just now discovered that inflation is not going away, which is completely insane because we've been talking about it for years here that it's going to get worse. It's going to get worse. It's going to get worse. A few, I guess, bozos down in comments on this channel have been saying that I've been predicting a crash. I haven't been predicting a crash. If you listen to the videos, what I say is prepare for a crash because there's a lot of risks out there right now. But if the manipulators have their way, they're going to keep this market pumped up. In fact, all the big money that's selling off their stocks, I wouldn't be surprised if we had the central bank come in and pick up the slack and start buying up stocks. It's true. It's a known fact that there is a trading desk at the Fed. We even have these trading desks at the big mega banks that are basically hand in hand with the central bank. Most of you probably know how that works, so I won't dive into that too much here. All right, now let's get into economic reality, and that is what's happening on Main Street. There's another survey out saying that consumers are feeling very, very insecure about the financial slash economic situation. And this was a study that just came out a couple days ago. And this is how they put it there. Consumer debt worries on the rise. This is ACA International A recent study finds that consumers are increasingly worried about security, job security, inflation, and debt. Folks, people are not confident. The quote resilient consumer unquote that we've been told that's propping up the economy is not so resilient. Again, they're propping up the economy based on borrowed money, based on swiping credit cards, based on raiding their 401k accounts, robbing Peter to pay Paul, all that good stuff. Why is it always Peter and Paul? I'm sure there's a biblical reference in there somewhere. Robbing Frank to pay Fred. How's that? All right. Folks, this is what's really happening on Main Street. The sentiment is getting worse. And what I've been saying here is prepare for things to get worse. This is not doom and gloom. This is just getting ready for what's ahead of us. And in fact, I think a lot of us are going to be ahead of the curve. We're actually going to do very, very well in this next economic transition. Will it be inflationary? Will it be deflationary? It doesn't matter because you're prepared for both. Have cash in case we see a big plunge, a big falling cost of living / bubbles bursting type of scenario where banks, something bad happens and the banks cut off the lending, prices drop, home prices crash, car prices come down, the whole economy comes down. That's not what the powers that be want. They want us to be inflationary. They've been trying to cover up the rising inflation now for years by saying, what do we hear again? It's temporary, it's going away, it's slowing. Then we see it speed back up again. We see consumers continue to get further into no man's land as far as how much money they have left over in their checking accounts. The savings amount is plunging and it's not recovering, right? So we've got the situation here where we've got to be ready for both scenarios. Be ready for deflation, be ready for inflation. How do you prepare for inflation? Well, you still have some investments. I still have some stocks. I'll never sell up all my stocks, but I am in a much larger cash position than I am now, kind of like the billionaires are doing. I'm not a billionaire, but I'm doing something similar on a smaller scale, of course, much smaller scale. I'm doing something similar to what we see a lot of these bank CEOs, a lot of investors out there, billionaires, selling off their stocks, going to cash. They see the writing on the wall. Are they getting rid of all their stocks? Of course not. That way, if the market continues to be propped up, they're still going to make some profits. And if they lose some in a crash, it's okay because they have cash to go ahead and buy on the plunge, right? Speaking of plunges, here's one that I missed out on here. Let's take a look at a stock here. And usually I'm right on this with you guys. And, you know, I've given a few of my trades out that turned out really well. Some of you are up like 600% on a couple of the stocks that I mentioned over the past year. I don't trade a lot, and what I've been doing, I've been kind of taking my eye off of the trading that I usually do to give you these market updates. Plus, I still do a business on the side in finance. But here's the one I really wish I would have gotten here. And this is Netflix. They just announced some more good news, made the price surge. But look at this dip. And I mentioned it at the time. I said it went, which it did. It went from where it was, the peak here was about almost 700. It plunged down below 200. That would have been the time to buy. That's usually the type of investment that I make. I just dropped the ball on that one, right? I was concentrating on going towards cash, even though I knew it was a great time to buy. But you would have been heavily rewarded if you did buy below 200, and now it's up over 600 again. So basically, you would have tripled your money. And at this time, I still wouldn't be afraid to buy some big dip like this, especially in a company like Netflix. It's going to be around. I don't think they're going to go anywhere. I wouldn't be afraid to go buy that type of dip where you see something go from 600 down to 200, right? That's almost a no-brainer. And even if you don't buy at the exact bottom, you just hold it, and eventually it's going to go back up if it's a solid company and there's solid demand for the product. Obviously, Netflix, there's still solid demand. There's millions of people out there, and their subscribers continue to grow. They're able to raise their prices too. That's how strong their subscription growth is. They can continually raise their prices, and people are still joining them, and the existing customers are still not canceling, right? So that's the type of thing that I look at. Also, if you find some good trades, please let us know down in comments, because again, my time is so stretched. I don't have time to seek out all the stocks like I used to, but I do have a stock alert set up over at Benzinga. And what that does, that alerts me to stocks that go down by 50% or more within a certain time frame. Within, like, you can set it for different time frames, right? Below the 200 moving day average, certain percentage drop. You can set up all kinds of alerts. And I'm going to start keeping an eye closer on that to look for opportunities, because I know one of the things and some of the feedback that I've gotten here is, JJ, we know things are crazy right now. We know the economy is insane. But what do we do? How do we navigate? What can we do to benefit from this? Well, looking for good investment opportunities is definitely a good thing to do, in my opinion. I still continue to stack silver. If we see this inflationary nightmare continue to unfold, you're going to be very happy that you have silver. And I think we haven't seen anything yet. I think once it hits $30, it could explode. I'm talking hundreds of dollars per ounce if the manipulation stops. If the manipulation stops, it's my opinion that silver would be $500 plus. And for those of you thinking there's no manipulation, all you have to do is look at the price movement in silver and some of the price movement we've seen over the past just few years. It hit $30 and it plunged back down below 20, folks. That's not people that are physically holding the coins going and selling all at once, right? That's something that's done at the click of a button. That's billionaires / trading firms manipulating the price. And there's a whole can of worms there that I don't want to get into. The bottom line is, if the manipulation stops, if and when it stops, I think it will stop, you're going to be seeing several $100 an ounce silver, in my opinion, right? This is all, I shouldn't say all, a lot of this is, of course, news, data, surveys. I didn't put out those surveys, it's news. But I'll give you my opinion on where things are at, where they're headed, how we should prepare for this, right? Of course, otherwise, you could just read the news and you would need to watch channels like mine. Let's take a look. Home sales clobbered by rising mortgage rates. Here's the thing. Sales are very, very low. The problem is we're not seeing prices drop yet because we don't have this surge in inventory. Some people are saying it's never going to happen because there's such a big population growth surge happening in the United States, with newcomers, new people entering the housing market. Some people say that it's never going to become balanced again. But back to what we talked about at the beginning, if we do see something happen with the banks where they're no longer to loan out the money like they're loaning out now, even though they have no money or very little money in reserves, again, they're required to carry zero and they can still make out loans. That's how insane banking and the economy is right now. I know some of you are saying, what are you talking about? How can they loan out money that they don't have? I get that question, and I still see that down in the comments. Folks, if you don't know by now, and for those of you that have been in this channel, I'm sorry I have to say this again, but there's people out there still not aware that we are off of the gold standard. We came off of it in 1971. Ever since then, it's been unlimited money creation. That's why you see inflation where it is right now, because they have to throw more and more money at the problem. Helicopter money, right? That's their solution. More of what caused the problem, and the high prices, high cost of living, bubbles here and there, everywhere. More of what caused that. They're saying that's the cure. Spending packages, the Inflation Reduction Act, right? All this stuff. More spending is not going to fix inflation, folks. Sorry, most of you know this, but it's just insane how many people actually still don't know it, and how many people in positions of power, if they do know it, they're acting like they don't know it because they keep doing the same thing. Anyways, let's get into some other news here. I keep getting diverted and digressing. I apologize. Let's talk about what's happening out here in California. We've got 2 more insurance companies dropping all their customers in California. It's going to be thousands of people now scrambling to find insurance. There's been other big companies announcing they're leaving California. So it's going to be more difficult to get coverage, and it could end up here in California like it is in Florida, where a lot of people have to go through the states to get insurance because there's not enough private insurance companies willing to accept the, in this case, hurricane risk in Florida. In California, it's the fire risk, and you have earthquake too, but most people don't carry earthquake coverage. So it's the fire risk is the big thing. What states need to do is they need to step out of the way and let insurance companies raise their rates. The reason these companies have to pull out of these states is because they're not allowed to raise the rates where they need to raise them to in order to feel like they can accept the risk. So when the state says you can only have rates this high, but you feel like as a company that you're going to lose everything if there's a big fire, then you don't want to even take the risk. You're going to move out. So if you just let insurance companies charge what they have to charge, then that would fix the problem, in my opinion. Now, there's people out there saying that that would cause things to get worse because they're saying that every company would then just raise their rates to infinity. But folks, there has to be a point where people just can't afford the product, right? So I don't think they're going to be allowed to raise their rates to infinity. So supply and demand, right? You can't just raise the price on something and nobody can afford it. That's defeating the purpose of a business, right? No one's going to be buying something if you just raise the price to infinity. So that whole thing, or that whole concept that companies are just going to raise their price to infinity without this regulation or state regulation, to me, that's nonsense. But please let me know what you think about that down in comments. Also, the less competition there is, the more companies leave or exit the state, then you have just a few other insurance companies absorbing all the other customers, and then they can raise their rates. But they have the ceiling too that the state puts in there that says they can't charge, this much, right? So it's very it's a big mess, folks, here. So I'm not sure how much longer I'll be in California. The thing that's kept me in California is my family, kids in school, um, parents, getting older now, they need help with stuff. They don't want to relocate, right? So it's real complicated. For those of you that have a family, it's super complicated. But I hope everybody's doing well. I'm doing fine. Hope you're doing fine. We're going to keep stacking. We're going to navigate this economy together. Please make sure you are subscribed so we can get through this together. And we'll see you on the other side. But please stay tuned for the next video. We'll see everybody very soon. Keep stacking. Peace.